Hey everyone, I'm Lucas, co-founder and CEO of Jito. Also go by Buffalo on Twitter. Jito builds MEV infrastructure, built the Jito Solana MEV client, and then Block Engine, and we're also contributors to Jito Network, which is a liquid staking protocol in Solana.
Hi everyone, Uri, CEO and co-founder of bloXroute. bloXroute is infrastructure for DeFi and MEV. Started on Ethereum, BSC, Polygon, Solana, helping a lot of people to see information fast and send their trade fast and land transactions.
Hello. I'm Brandon Tucker. I'm with Marinade. Marinade was the first liquid staking protocol on Solana, established at a hackathon back in 2021. So it's a grassroots protocol, and we also have native staking now too. So whether you liquid stake or native stake with Marinade, we're delegating your stake to a group of 100 plus validators, many of which are capturing MEV rewards for their stakers.
Hey everyone, my name is Nitesh. I'm the CEO and founder of DFlow. We are building an order flow auctioning and segmentation protocol, an aggregator on top of that, a liquidity aggregator, and a mobile trading app on top of that.
All right, cool.
Wait, who are you?
I just go on Twitter and have RPCs that you guys should use. Okay, so let's get into it. First, I guess I'm curious because in the past, well, just really about 2 months now, there's been a lot of congestion and issues with kind of the process of sending transactions to the chain, which leads to other second order effects. So Lucas, do you want to just maybe give your thoughts on the state of the network currently as it is?
Yeah, so, man, where do I start? There's been some congestion recently on the network. It's getting a lot better. There's a lot of updates being pushed by the Anza team in 117, and then the network's in the process of transitioning to 118 right now. I think roughly 10% of stake that will continue, and the entire network will be on 118 pretty soon here. There's two main areas where there's a lot of congestion from like an engineering standpoint. The first one is the Quick server. So if you're sending transactions to Solana Validator, you do that over Quick. It's kind of like a mix of UDP and TCP. So you send UDP packets. There's like acknowledgements. It's basically TCP, but with no head-of-line blocking. And there's a lot of crafty searchers that are trying to basically abuse that networking stack to get their transactions in faster. And so there's been a lot of work on making that much better. It can handle the traffic that searchers are throwing at it. And then, there's the stake-weighted quality service, if you've heard of that. That's kind of a way to give certain parties more access to the networking stack to get more packets through. The other area of congestion, which also gets better in 118 with the command line argument, is the transaction scheduler. Today, the scheduler in 117, basically there's 4 threads. Each thread has its own view of the pending transactions, and it kind of just churns through those. So it's kind of just like pseudo priority fee ordering, but there's also some randomness involved. 118, there's a new scheduler called the central scheduler. I think the command line argument when you're running 118 is like -- block protection method central scheduler. It basically changes the scheduler to something that has there's one thread that has a view of all the pending transactions that are sorted, and then it uses some worker threads where it will like dispatch workout. So basically, I'm getting in the weeds here, but I'm an engineer, sorry. But basically it orders the blocks much better by priority fee.
All right.
Can I add one more thing to that?
Of course, yeah.
And from the user perspective, who care nothing about all that thing, but we had a nice run. You send transaction. They immediately land. I love Solana. So everybody moved to Solana and all the searchers came and do all the tricky things. And now I can't land my transaction, landing transaction. Not, whatever you do, just landing them became so hard, especially when things are volatile and price is volatile on Solana. And so, or on Sol. And so that became like, for us, it's now our number one service. Everybody wanted, but I think it's on everybody's mind. It's you want to land transaction. That's like from the user experience, it's kind of like, it was great. It became horrible. And now it's kind of like getting to being good again.
Yep, that about sums it up. Well, actually, so one of the mechanisms that was released, kind of released as a maybe not clear if it's a band-aid or a long-term solution, is stake rate QoS. Kind of a controversial topic, I would say, depending on who you ask. So I do want people's thoughts. Nitesh, we'll start with you. Like, what do you think about stake rate QoS? Do you think it actually makes sense or works long-term? Any strong opinions about it?
I think it's a good short-term approach. I think long-term, something else is probably warranted. I like kind of the economic first principle of creating a market for bandwidth. And generally, I do see the downsides as well in that, there is this factor of if you don't have the economics to pay for bandwidth, you're going to be deprioritized, which is not great for great as a first class property of a blockchain. But I think it's a good initial step, and it's just a matter of iterative improvement.
Cool. Nice politically correct answer. We can go down. Brandon, you want to go next?
Yeah, sure. Well, I'll just mention, Marinade stakes to 100 plus validators throughout the network, and we're really just interested in providing the best performance for stakers, but also decentralization and performance for the Solana network. And I'm here at Consensus this week. I'm thinking about how far Solana has come since last year. I mean, it was kind of like a graveyard last year. People were surprised that we were building on it at all. And so a lot of things Marinade did last year as a kind of combative effort to some of the shenanigans going on really shortly after the FTX was we were thinking as much about downside protection for stakers as MEV rewards, because MEV, there wasn't a whole lot of it when the chain didn't have much activity. So what we wanted to do is we wanted to introduce protected staking rewards for our stakers, and really this provides downside protection to any validators, to stakers, against any validators who do try and rug their commission from 4% to 100%, things like that. So I think all these things that we're doing in monitoring, we're making sure that we're delegating stake to the correct validators operating in the right way and providing the best service quality to stakers too.
I also like the stake weight QoS. Like, it's not great, and it's like really who should get some bandwidth. Like, why necessarily validated with a lot of stake and not, let's say, a big trader who wants to, I don't know, pay for it or stake for it or whatever. But I can say from a very practical perspective, we were trying to land transaction for our users. So it's like, okay, let's take a transaction. Let's give it a priority fee and send it super fast to the leader, and also send it as a bundle through Jito, and, aggregate it with other transaction to a bigger bundle so it lands more. And like, add stake weight QoS as well. And we're seeing the improvement. If you do like one and the other and the third and the fourth and the fifth technique, etc., this really adds up to landing transactions fast. So we're seeing that we're no longer dropping transaction, which from my perspective is the number one problem that we wanted to solve for. Transaction land fast. So practically speaking, yeah, it's not perfect. I don't know that necessarily the long term, but it does really help. Like, we're taking a good advantage of it. I'm sure Helius are taking a good advantage of it. I'm very much in favor of it. I think this really played out well so far.
Stake rate QoS, I think it's a good starting point, but what do you actually care when you're running a validator? Like, what do you care about? Care about money, how much money you're going to make. So I think it's a good first pass, but I think there's going to be variations of this in the future that maybe they start out using stake-weighted QoS, and the QoS algorithm kind of adjusts over time for who's sending me the most valuable transactions for me to make more.
Yeah, that makes sense.
And
then,
can I counter that?
of course, yeah.
Why is that better?
All right.
Why is it better?
Why, like, sure, we could do that. Why not let the validators who have the stake weight QoS they could sell it to other traders and make money. Like it will be used instead for spam, but for higher value transaction. If they don't, they will have an issue, right? Less of their transaction will get there. So why do you think it's necessarily that we want to improve it? Just to spice things up.
Playing devil's advocate here.
Always.
Yeah, I mean, if you're running a validator, like that's your livelihood. That's how you make your money. And I think that, you want to be running the best block packing algorithm. You want to be making the most rewards so you can get more stakers. And stake-weighted QoS, it's a good kind of first pass at this. And, there's people building bandwidth markets and other things that are kind of I think they're like a proxy or like second order type implementation of this. But at the end of the day, you care like how many transaction, like if you have a job, you care a lot about your hourly rate. What's my salary, my hourly rate? If you're a block producer or validator, it's the same thing. Like how do I get paid the most for doing the least amount of work? And so I think that, this is good first pass, but I think there will be better algorithms that come out over the next 3 to 9 or 12 months that try to put this into implementation.
Satisfied with that answer? Yeah. Okay. Well,
I disagree. But I don't think it's an important enough topic. But it's kind of like it's kind of like we got 90% of the value. Right? Yes, we could improve it, but I think the first pass got us most of the way there. That's my take.
Okay. Well, it is called Inside the Solana MEV Jungle, and we haven't actually talked about MEV. And actually, we're still not going to talk about it because I'm curious on what people think about kind of the other thing that's accompanied stake-weighted QoS, which is the rise of all these LSTs and liquid staking tokens and people spinning up their own validators and stuff. What do you guys think about that, Lucas? We'll start with you.
Yeah, I mean, pretty biased here. Building MEV infra and running a liquid staking token, but I think the single validator LSTs are pretty cool. It's a way to give your stakers like your cake, and they can have their cake and eat it too. You can go participate in DeFi and whatnot. But yeah, I mean, I think that there will probably be variations of stake-weighted QoS that people are going to start. I mean, we're already seeing validators start to kind of experiment with this in Discord, where it's like, oh, I'm going to like have this IP table rule that like blocks this like certain type of packet or whatever. They're trying to kind of tweak stuff, and we're already seeing people tweak it and get 10, 15, 20% better block rewards. And I think there's going to be a lot of people that start to push that forward. So TBD on like how long pure stake-weighted QoS is around.
It's not that I'm against LSTs. I think I have an issue. Nobody ever eats the cake and keep it full, and whatever the right way you say it in English. So LSTs are great. Sure, I'll stake with that, and like here's like a receipt for me to be able to use it. I think my issue is that most people think, well, having the LST and having the token itself is kind of the same thing, so price should be the same thing. Whether it's wrapped or not wrapped, that's not really interesting. And I think people should be very aware that these are not the same things in terms of like, okay, what's the market size of it, and can you sell it and unstake it, and how long it takes, etc. And so I expect when things get really bad and really turbulent, like the next FTX implosion or whatever, there's going to go, oh, well, I have one LST or Sol itself. If everybody are selling, then Sol has a much bigger market than each individual LST, even if it's a large and really awesome LST like Jito Sol. And so there will be a gap. So everybody who created some sort of like leverage or market, I'm like, yeah, it's roughly the same thing. We're going to have discrepancy. It's not going to keep the same price. Things are going to go in weird directions. And let's just be clear on that that's going to happen. And so I have nothing against LSTs. I think it's kind of awesome that I could stake and also do all put it in margin file or whatever and like get points, which I hate. And so all these things, but let's be very like, it's not the same. And maybe every so often we should tell it to everybody so they remember it, especially people who aren't deep in the reads of everything like like the people building Solana?
Sure. Yeah. Well, Marinade was the first LST to come out, August 2021. And then shortly after, you had Lido come out. Then you had like Soch and Sol. I think it's great that we've got Solana-based focused teams building LSTs, whereas we saw Lido kind of had one foot in the door and kind of bailed. I think the pools are, that there's the individual LSTs, and right now they all seem to be doing very well from a performance standpoint. The real main value proposition of a Marinade Sol or a Jito Sol is that you're getting this performance protection by delegating across a wide network of validators. So you're helping to centralize the network by delegating to so many validators, but also if one of them goes offline for like days on end, and this maybe isn't happening right now, but during FTX and the Hetzner incident a couple falls ago, about 20% of the validators just like up and went offline immediately. And if you're staking to those validators, you're being affected. So if you don't want to be one of these people who's like actively monitoring your stake, you want to be with a pool who's monitoring the stake for you, which is what Marinade does in Jito. And I'll also mention that we did introduce at Marinade a native product as well. So if you don't want to mess with the LSTs, if you don't want to mess with DeFi, but you want that delegation strategy, you go with Marinade native instead. So, I will add, like, I'm an LST enjoyer. I love Solana DeFi big time. But yeah, you got to be aware of the risk. Like I hate it when I see people get liquidated off like an Oracle problem. I think it's important to remember that, we still have more validator clients coming that will maybe help the liveness of Solana more than recently. Like you can have Oracle problems and get liquidated out of a position really easily with an LST. So be careful. Don't like max leverage. That's my financial advice for the day. Just be an adult about it.
I'm probably pretty neutral on LSTs. I think the thing I am most anti is the incentive for projects that have kind of their own business goals and like thesis on what their project should do and the impact it should have on the world. It's a distraction for them to probably work or worry about, how can I get my users to land their transactions on chain, to the extent that they have to start worrying about things like quality of service, stake weighted quality of service. Feels like a lot of these are treating kind of the symptom and not the disease, which, the way I think about it is to increase the actual economic cost of spamming the network. But that's, a big hairy problem. And, for the time being, I'm pretty neutral LSTs.
Okay. Well, let's get to the main topic. MEV. So I want to ask, there's some interesting stuff going on that people don't necessarily talk about. Maybe that's why this is actually called the jungle. Some people are getting sandwiched. There's some private mempools, random stuff like that. And I'm curious what you guys think about the current state of MEV, but also how you think that changes with a second validator client with FireDancer. Or actually maybe with Frankendancer immediately and by breakpoint. And I'll start with Master MEV, Lucas.
Yeah, I'm not super happy with the way that MEV's happening with the private mempools. I don't know how much I want to say here, but we know
Lucas know all the dirty secrets,
I know
so
who
he
it
can't.
is.
He needs to hold off from telling them, so everybody would do them.
Yeah. There's just like,
Recorded? Like actually?
Okay. Yeah, I mean, like most of the activity on Solana is meme coin trading. There's a lot of volatility with that. You have a lot of the block time's so fast on Solana that when you think about getting a price, it will give you a quote. You take a second, you sign your transaction. It takes a few seconds to land on chain. People are just bumping up their slippage. There's a few private mempools that are popping up and sandwiching people. Not super great. I'll let Uri comment on the other stuff, but or add to this. But I think looking forward, 18 months, 2 years, FireDancer, I think it's still we're definitely starting to think about it. It's kind of an interesting area. Like, what does this look like when it's doing 100K, 500K, a million TPS? Like, what does MEV look like? And, it changes the way that the system would work today. And, it's a pretty interesting design space, I think.
So again, spicy. A few things I want to say. First of all, I want to say that sandwiches and front running are terrible. They're destroying DeFi. They make DeFi never compete with CeFi. And actually, in the long term, all the validators are better off if they don't exist, because their bags will make way more money than how much they're paying. So before all of that, Jito ran it. They ran with the mempool and sandwiching. And I think I even told Lucas a few months ago, or whenever that was, I was kind of like, at some point, everybody are going, every order book transaction, every market maker who changed their position, everything will be sandwiched and it's going to be awful. And when the time came and we got a lot of mass adoption, etc., Jito did the absolute GOAT thing to do. It was like, listen, we're going to turn off the mempool so users don't get front run and sandwich. And that's like a giant kudos, and they did the right thing, and I totally support them in that. Now, I do want to say that afterwards, I don't know, a month ago, I don't remember when that was, I saw Solana Foundation with an announcement. Listen, if you're going to fork and create a mempool and private, we're going to pull away the stake from, I don't even remember, the staking program or whatever. And I'm reading this okay, so it was fine when Jito did it for a year, and sure, it's fine. But then Jito decided they're not going to do it. And again, I support them 100%. That was the right thing. And now we're going to, no, you're not allowed to do it. That's bullshit. That really threw me off. I don't like it. I'm probably one of the most outspoken people against it. But for the foundation to come and say, oh, it was okay up until now, but now that Jitos aren't doing it anymore, we're not allowing any of the others, I had serious issues with it. I think that was either you're dictating what we're doing, or you're not. I think you shouldn't. But playing favors that way really drove me mad. Again, zero complaints to Jito. Jito are awesome, and I love what they're doing. So that's a second point. And the third thing, I'm working on a different thing. I'm trying to say, can we do other things specifically on Solana? So I have this project that we're doing called Paladin. Basically, can the validator run a bot inside the validator and capture all the good MEV and not do any of the bad stuff? Arbitrage and CeFi DeFi arbitrage are great. We actually want HFTs to constantly correct the price. We want that. So if you're trading in DeFi and we want DeFi to compete with CeFi, you don't need to check 7 different venues where the price is best. If you have arbitrage and it's always corrected, everywhere will have the correct price. It's awesome. It's great. Front running and sandwiching is destroying DeFi because it extracts value from the user. It means the user won't trade on DeFi. They're better off buying it on Coinbase, or you have $1,000, you're better off buying it on Coinbase than buying it in DeFi. In DeFi, oh, you're making a big trade. I am the market maker. Let me just withdraw all my liquidity and then okay, it happened to me a bunch of times. And so I feel strongly about front running and sandwiching. We should try to build good system, blanking on the name, on the verb for it, that allow us to capture all the good stuff of the MEV, but really get rid of the front running and the sandwiching.
One nuance to the second point you mentioned, I can't speak for the Solana Foundation, but I think there's another issue, which is just the private searching piece of it that they didn't like. It's private, no one knew what was going on behind the scenes.
Sir, you're running a block engine, which is a closed source, and I have no idea what you're doing. How is that different? Except that you have better order flow.
Well, we publish all the data on the bundles that are going through where they weren't. And all the tips are distributed in the open where they were kind of going behind the scenes and who knew if the validators and who knew if the stakers were getting paid out.
Again, I'm against the front running and the sandwiching, but the playing favors that way, at least for me, people could decide for them, if this is a good enough reason. That doesn't convince me to play okay, now we decide it's good, now we decide it's bad kind of thing.
I'll just briefly add that, Marinade will support validators on all the clients. So when FireDancer comes out, we'll support them for sure. Marinade we don't really care where the yield comes from to a degree, whether it's like inflation or MEV. We want to bring the best yield to stakers. However, we are very committed to a strong, awesome Solana network, and we're not interested in supporting the front running and the sandwiching and all that. So anything we can do to exclude those types of transactions, we would be all for, although it sounds like it can be sometimes tricky to identify.
Yeah, don't think I'm saying anything new when I say the state of MEV and trading on chain is pretty atrocious in terms of an experience for actual users, both in terms of how they land transactions on chain and the prices they pay. It's, obviously max slippage realized almost every time, depending on time of day, et cetera. But I guess the one thing new that I'll add here is prior to starting DFlow, I was a quant researcher at a high frequency trading firm, and high frequency traders spend all day building models, deciding how to cross the spread, and invest massive amounts of research into both liquidity making and taking. And then you take kind of like that style of thinking and you bring it to crypto and Solana, and you're like, how can I make money here? And it's just the most ridiculous thing, right? Like, you can go and tell a validator, like, I'll pay you so that this market maker can't remove their quote in time and I can cross the spread profitably. These sorts of things, I think, are pretty existential problems for like the long-term goals of Solana and what I assume we all want crypto to become, which is the next generation of finance. I don't think we get there until there are some really meaningful changes in a lot of the market structure on chain. This is something I'm deeply motivated on working on, but won't shill DFlow here.
Yeah, always be shilling. We have 2 minutes. I did want to maybe quickly comment on the second point you made, Uri, about the Solana Foundation delegation thing. I don't think Solana Foundation is here.
Should we roast somebody from the audience?
I'm looking for somebody from Solana Foundation. I don't see Tim. I'm not sure if it's the same because the top 70% of validators of stake actually don't get delegation anyways, right? And Jito's kind of within that, the two validators. And then it's also open source, like the client, whereas these guys are kind of forking Jito, actually, I think. And so anyway, we do have 2 minutes. I do want to ask, final question, the cliche, or maybe not a cliche, but what do you hope the future of MEV on Solana looks like within 2 years?
You want to go again first? Okay. If I'm coming from Ethereum and EVM, okay, we have we create an MEV auction, right? It's kind of like whoever, and we're trying Flashbot in that direction, trying to solve it by saying, well, instead of participating in that, we'll have solvers, we have intents, etc. That direction, in my opinion, is very limited because it's really boiling down to an RFQ. Oh, you have $1,000 and you want to buy Sol? You ask for it, and whether that's Wintermute or SCP or any of the large like big traders and market makers, you'll get a quote for them. RFQs are great; they're useful for a bunch of stuff, but the price is always going to be worse than the actual open market because they'll add a few basis points for profit and a few basis points to cover for risk. And so the one thing I hope for, and I want to see it, is us not limiting DeFi to be sure this is going to be the most extractive thing and non-helpful thing, and just have RFQs and really build systems that compete with CeFi.
I'd like to see more efficient markets on chain. I think a lot of the stuff I was talking about earlier will help out with that. FireDancer will certainly help out with that, and just looking for more competition on a lot of these things as well.
I want retail to stop getting front run and sandwiched. I want validators to make a lot of money, but I want trading to kind of be efficient.
Yeah, good points. And I'll just echo transparency of the shenanigans as best as possible, so we can. I want to protect retail for sure.
All right, cool. Well, that's all the time we have, unless there's any burning questions in the audience. Yep.
So we have a stake way to do invest where you pay percent order flow with validator. If we look at TradFi, they actually pay seawater flow. So it sounds kind of like it only exists because it's so shorter. So do you actually think it's sustainable? It's a great mandate.
I'll take that one. That's payment for order flow. I don't think this is sustainable. Retail order flow is very attractive to market makers, not because market makers are doing things like front running them or extracting value from them. It's just a non-toxic way to capture the spread, right? Bid ask. And that really should be the model. Like, this flow should not be they have to pay someone to get it on chain. Like, it's valuable to other entities without harming user. So yeah, I think that's a good question and spot on.
So are we going to do away with priority fees then? For all that logic?
So not everything is non-toxic, right? Like sometimes users want to, and when I say non-toxic, I mean purely in the statistical sense of like, this does not harm a market maker spread. There are lots of transactions that land on chain that should be paying priority fees. Validators should be making lots of money because they protect the network, but you have to isolate the things that are harming users in order to secure the network from things that are not harming users to secure the network. And we have to move towards the latter category, which I think priority fees can help with.
Anyone else?
The market maker's biggest cost, like toxic order flow. And so RFQ is always going to be superior to on chain, where RFQ you go for like last look, so you can filter out toxic flow. But on chain, you have a latency race, and this is like why all of TradFi kind of like has this low latency answer race, is to avoid as much of the toxic flow as possible. And I would have thought RFQs better prices, I guess is the question. Why do you think RFQs are less efficient than on chain?
That's a good point. When you do an RFQ, you actually give the last look to the user. And so, right, I am the market maker. I'll give you, here's a price. You can use it in the next 400 millisecond or 5 second or 10 second, depending on platform or whatever. And so you could try to snipe me, and then I'll try to get people who snipe me out, etc. But I now have inventory risk or whatever for this duration, and you could snipe me, and I should profit from offering it, etc. So like, by definition, an RFQ is always worse than the market price. Otherwise, why would the market? So sometimes they do it. We actually, if you're familiar with hash flow, they're kind of like, they have the one model and then they change to the other. I think we can talk about it after the fact, but generally speaking, always RFQs provide worse price than the open market, because the market makers should profit. They give you, here's what roughly is the market price plus my margin. They only do it because they have a margin.
All right.
Thank you, everybody. Thank you, Mert.
Thank you.